I've lost $36,000 just today alone, closing two really bad DCA trades that didn't work out. If you want to learn my whole trading strategy, I have a bunch of other videos on that. We're not going to talk about that here in this video. My last 10 videos, any of them, should be able to help you learn kind of the current way that I trade. And I also have a free Telegram channel where you can just follow it all live every day. Just a link in the description. I just post all my analysis and stuff. So let's really just get straight into it here and kind of dissect what happened. The best place to start is at the end, because I can only show you what's happened by showing you where things ended up and kind of tracing the way back. So this is a DCA trade I've been in for a month and a half. I took the first position back here. So it was like 6 weeks ago, maybe 6.5 weeks ago. And then I added positions here, added more layers here, and finally one up here before I just closed it right here. And I closed for the main reason of thinking that this is no longer likely to continue down at this current moment. I do plan to get back into these two trades that I've just closed this morning, but right now I don't really personally see a good enough reason to stay in them for now, because I actually think they're going to be continuing up. So let's go ahead and just kind of walk through this on the chart here. This is the chart right now on USD CAD. This is what I think is likely to happen. I think price will go up here, and then if it does go up here, then I'll be entering a sell. That'll be a new trade, and we'll see how it goes. But let's take it all the way back here to the beginning. Price came up here to a resistance zone. I had taken these sells all throughout here. I called this like 2 months ago. I think a little bit over 2 months ago. And these ended in a nice profit, almost a $6,000 profit. And then price came back up, so I essentially just re-entered the same trade again. So I entered right here. Let me see if I can just, I'll just do one standard lot here. I'm just doing this to just show you guys the concept. So one standard lot, whenever price went and broke above this zone, I added two more standard lots. So it went up above the zone, added two more positions. Normally what happens with DCA is you just keep adding to the losing trade, and you just keep doing it with controlled risk. For example, I'm using one standard lot on a $200,000 account. The account is now no longer $200,000. The account's $167,000 now. But at the time it was like, I think it was like close to 200K. So anyway, this is roughly analogous to you using like a 0.01 standard lot for every $2,000 in the account. Like that's how small the position sizing is. So the idea is that you just keep adding to it, right? So, and then eventually it comes back, because each entry you add is a 50% chance it'll go up or down. So if you just keep working out the stats, you'll get a losing streak like this every once in a while. But overall, the stats kind of play out to the case where 90% of outcomes, 95%, 97% of outcomes work out to be either a profit or break even. So I added more positions up here. It went against me even more. Then I started adding positions here. So I added a layer of around, I think, 6 positions here as price went up. I thought like, this is a resistance zone. Price might bounce here. I had another plan to add even further up, which is what I did. And what ended up happening here is this is the first thing that I've kind of learned from this trade that I probably won't be doing going forward. And just for context, I started just trading exclusively DCA about 3 months ago. And I was using this small position sizing. That way I could test out the proof of concept and ensure it continued working before I then put more capital behind it and split it up into different accounts and start trading it with heavier sizing. Because before I was using sizing where I was essentially risking like $50,000 per trade or more. And with this one, I toned down the risk and traded it for the past 3 months. And it was good. I learned quite a bit. So here's the first thing that I would have done differently. Could I go back? All right, because like I still look back sometimes and I'm like, okay, I could have managed things a little bit better than I did. And before I get into this, I know a lot of people, a lot of you right now are probably thinking, well, you see, this is stupid, and you see, this is that, and you should have done this, Nick, and you should have done that. Here's the simple fact of the matter. I've been trading Forex for 9 years. I've been trading Forex, stocks, and crypto for like 8 years. Okay, I've been through all the ups and downs. I've tried so many different trading approaches and strategies. I know what it's like to have P&L curves that go way up and then pull way back and then go way up and then pull back and then pull back more and then go into the negative and then go back into profit. I have been through the roller coaster of trading. Okay. I'm uniquely qualified to tell you that trading is not this beautiful equity curve that just goes up and to the right. Trading has its ups and downs. Overall, I've been profitable every single year for the past 6 years, trading Forex specifically. But I've gone through some beatings of a losing streaks. So before you start giving everyone advice or saying that this is stupid and this doesn't work and this is just gambling, I would ask you to consider the fact that no trading approach is ever going to always perform amazing. Even the one that you're trading right now or the one that you think is better than what I'm doing or whatever, we're all just looking at the chart and we're buying when we think price is going up and we're selling when we think price is going down. And we're using a risk structure that suits our risk tolerance. So really, everyone is trading identically. The actual mechanics and the dynamics, it's all going to come down to experience and context. There's a bunch of nuance in there. But the only thing that gets you profitable is experience. And the only thing that keeps you profitable is experience. Just asking you to consider that. So with that being said, I get it. Coulda, shoulda, woulda. Everything's 2020 in hindsight. I'm just showing you what I did. So as price kept going up, one thing that I did that I wouldn't have done could I go back is adding so many layers of positions. Here's what this looked like on the third DCA, right? So I guess the price went a little bit further up before I added. So it would have been further up here. I know it's kind of hard to see because of all the numbers right there. But essentially up here is where I started adding like layers of positions, like a lot of positions. So I added a bunch of layers here. Had I gone back in time, I would have only added one standard lot here and then one standard lot here. So was it a mistake that I did what I did? It's hard to say it was a mistake. I can't say that honestly because I've done this for 3 other trading opportunities that I thought were really good over the past 3 months, and they all worked out. And I made more profit on those than I would have otherwise made had I not added more positions. However, USD CAD, the max drawdown on this would have been maybe like 10K, maybe 12K or 15K if I had just done like a set position sizing. So the first lesson from this is if you're going to be using a DCA approach, I really recommend not layering a bunch of positions around same prices, because even with someone who has experience like me, you have anomalies in events like this where price just continues rocketing straight up. And then it went into huge profit, and this was about to go into my break-even point, and I was almost able to get out of this. But this was on literally the election night as Trump was looking like he was going to win right before the stats came in that he was elected. And the US dollar just strengthened, and it completely reversed, and it shot up here and went and made a new high. I was almost out of this at break-even. Right here, it was like a negative 8K drawdown. Had it come back just slightly, I would have been able to have gotten out of this and yeah, like around a break even. But that didn't happen. You know, you can't predict anomalies like this where price just keeps going. So going back, I just simply wouldn't have added this many trades. I do still believe it's fine to use a multiplier, but it just needs to be really spaced out. So for instance, one standard lot here, one lot here, one lot here, and then as price goes up and makes a new high, 1 2-lot position. Right here, this was a total of 6 lots. It's hard for you to see this one right here because there's 2 positions. You can actually see from the arrows here. There was a sell here, and then as it started going down, another sell. That went into profit. It then spiked up, hit the high, bounced away, then I added the 3rd sell there. It's just around the same price, so that's why it looks like it's just one trade. But this is a total of 6 lots here. Going back, I would not have done this. I would have just done 1 2-lot position. Then the drawdown wouldn't have been so big when it made a new high. Then it went up here, added another 2-lot trade up here. That went slightly against me. Then it went back into profit. Then it went into like, I think $1,200 of profit before bouncing twice at this area. And here's where the trade concluded. So had I, for one, just done like 1 lot, 1 lot, 1 lot, and then like a 2-lot and then a 2-lot, this wouldn't have been as much drawdown, right? Maybe like 10, 12K drawdown. Let's just say like the max, maybe like 15K of drawdown. That would have worked out much better. In fact, I'd probably still be staying in this right now. But with my position sizing being so heavy and it being a DCA approach and me knowing what the stats are, knowing, okay, if this goes up, I'm going to have to be sacrificing other good trading opportunities to stay in this USD CAD debacle. hoping that, at some point it finally sells off and pulls out a little bit so I can like get out at break even. And I just don't see that happening right now. So I think trading capital is better allocated to other trading opportunities here at the moment. So that's the first lesson I learned from it. Now, the second thing that I would have done differently, but I can't, even if I actively would have done it, is I would have been a little bit more dynamic about the positions. Again, DCA trading, the reason you don't see this working very often in automated algorithms and EAs, there's been a couple people on YouTube try to automate this trading approach, but the one thing that radically undermines any attempt at automating a manual trader's trading approach is the fact that the manual trader is the reason the trading approach is profitable to begin with. Their discretion, their intuition, their applied experience, the nuances and subtleties that are associated with trading decisions like when to add and how much to add and when to close, like when to just take the loss. You cannot program intuition and experience into an automated trading approach or an EA or an algorithm. So that's why you don't see DCA approaches working in algos, but you generally see a lot of people able to make it work manually if they have a little bit of experience, like just enough to justify that they're going to be profitable long term. So the second thing that I would have done is I would have been more dynamic about using discretion to cut positions. For example, when all these trades in here were going down, this was in around, I believe, like a $5,000 profit. At the peak down here, when it got to all this huge layer of a bunch of positions here, what I could have done is I could have closed all of these right here at a net profit. And I still would have had these in drawdown, but this would have been so much easier to manage. So let me just give you an example, right? If I did one lot here, one lot here, one lot here, and then a two lot up here, if that two lot trade would have gone down to close to the one lot, and since the position sizing would be a little bit heavier, that would have worked out to a profit if I could just close those. Now, here's the thing. Due to US regulations and a requirement and a rule called the FIFO rule, FIFO, it's called the first in, first out rule, I am not allowed by my broker to close a second or third or fourth position until I first close the position before it. So what that would mean is I would first have to close these trades down here, that first one down there, then these second positions, and then I would be able to close these. Well, that doesn't really do the trading approach justice, because then instead of being able to break even on this outcome up here, I would have to close everything at a loss, and so it would be a net loss, and it would show in the P&L net loss, and then I'd have to re-enter a short position down here with the same position sizing as here, but it would be like the positions would be taken off and then it'd just be added back to them. Being able to do dynamic things like closing these up here but leaving the original ones, this allows you to break even on this outcome, and then price went up here again, I could have added heavily again, and then the profits from this could have offset the losses from these down here, and then I could have closed all of that at probably a net break even. Probably a net break even. I mean, if I was able to layer in positions up here, because I don't have all of these DCA trades, I could have done maybe like heavier position sizing, maybe like a two lot, and then it went up even higher, another two lot position. And those would have come down. The profit from like the 4 lots of sell volume would have offset the losses from literally just the volume that this was on its own. But had I even been just using like normal sizing with just one lot, that for sure would have, these profits would have canceled out that. I could have been out of this break even like, a couple days ago, and with way less drawdown. So that way I could have still traded other opportunities, which there's a couple that I missed because I was in USD CAD and NZDUSD. So those are the two things that, going back, if I could do anything about, I could change. Now, unfortunately, the second thing I just won't be able to do, right? With FIFO rules, my only other option is to go and trade with a broker that's offshore, unregulated. There is a lot of hoops I have to jump through to be able to do that. At this point in my trading career, I just have no intention of doing that. I'd prefer to keep my capital with a regulated broker. I never put all my trading capital in one account. I just use accounts that are a small percentage of my trading capital. So I just put a couple $100,000 into an account. It's usually like $100,000, $200,000. I used to start 50K accounts and double those and withdraw, but over the past few years, I've just gradually increased the starting balance, the starting deposit. So That's USD Canadian dollar. To sum up the two things I would have done differently, number one, I just, instead of doing a bunch of layers of positions around same prices, I would have just done one lot, one lot, one lot, two lots, two lots. And this would have been, at the worst case scenario, just would have been much, much less drawdown. Best case scenario, would have been able to get out and profit or break even a while back. And the second thing I would have done differently is being able to close dynamically baskets of trades within the whole position. But again, if I was able to get out of these all at a net break even and then just leave those, right? Because then it's just small position sizing. Sure, it's in a big negative drawdown, but I was able to lighten up the position by getting so much like sizing out, by just closing all that out and then let it go against me again. And I could have added more, and then that goes into profit. I'll use those profits to offset these losses, close everything there, call it a net break even, move on to the next. Like that works really well. And I've done that for the past 2 years. When I was using unregulated, degenerate offshore brokers, but it's just not something I'm willing to do anymore with my trading capital. So those are the two things I would have done differently. We'll also look at NZDUSD, which is roughly the same thing, just opposite. I'm really happy at how I managed this because the drawdown wasn't really that bad. And at one point here, had I added down here, which I didn't, this could have been a break-even outcome, but I'm really happy with the outcome on New Zealand dollar, US dollar. You won't be able to see all of the trades here on NZDUSD. But for example, like you look at that buy right there, this was closed in like a 2K loss, right? So a 2K loss, this was another one closed at 500. And you'll see the position sizing is like 0.5 and then 1 and then 1.5. It was relatively small sizing. I think I maybe lost like perhaps 10K on this. I started I'll have to get out of this replay mode. Started the positions way back here on NU, thinking there would be a reversion. So 613, a little bit below that is roughly where I started it. I bought at the low, thinking it might bounce. So it went against me. I bought again. I let it go really far against me. I bought again. And then I let it go even further against me. And then I bought again, like down. I think it was, like down here. So this just hasn't had bounces anywhere. Like something to consider is how often does this happen? That's a 500 pip move with no pullbacks. It's just not, TradingView is not reloading. It's not loading the data. Okay, here it is. Going that far in one direction without significant pullbacks is not typical. Generally, when you see moves that go even like that far to begin with, you have good enough pullbacks that can allow you to get out at break even on a set of DCA trades. But even then, like, even in best case scenarios, like that's not even always going to work, right? So that's why being dynamic about it helps more. Is there much I would have done differently on NU? Not really. I'm happy with the way I did it. I'm happy with the way I was really patient and waited for this other entry down here. This is probably going to end up working out at some point. I just don't see a reason to stay in at the time being. Like for the time being, I think it'd be better to just wait. I'm going to wait for some price action to develop. And then maybe I'll just hop back in. I probably won't do the same position sizing, but I'll hop back in with position sizing that I think is reasonable and try to profit from a little bit off of the reversion if it goes up. So that's that. It was $36,000 of loss here in a day. But it's really cool because I've learned some cool stuff. And then I also know the DCA approach works, right? Because had I just done normal position sizing, and even if I would have taken the loss on USD CAD today, but just closed it with the position sizing that I should have done, that I ought to have done, which is one standard lot for every $200,000 in the account, or a 0.01 lot for every $2,000 in the account. Same thing proportionally. This would have been maybe like a 15K loss today, and I'd still be up in a lot of profit from the past 3 months. So what I intend to do now is I'm going to start multiple different accounts. So that way I can take different opportunities on those accounts. That way there's not all the trading capital in like just one account. And then say like, because you're going to blow an account every now and then doing a DCA strategy like this. So it's like if I start one account and then I trade it for like 3 months, that account could end up getting blown and then I have nothing to show for it in terms of P&L for like the past 3 months. Even if the next account and the next account and the next account I grow, there will be a period of time where there was like no profits and there were in fact losses. So what I'm going to do now is I've already got the account set up with forex.com. I'm going to be using multiple accounts I'm probably going to start with a 50K deposit. And then after a few months, assuming everything continues to go well and I continue to work out the little kinks and with the position sizing and everything, then I'll probably increase those deposit sizes. I'll just top them up 50K each. So that the starting deposit will be probably 100K each. And then I'll be able to do that going forward and I'm going to trade 3 different accounts concurrently at one time, because I believe that will be a good way to like spread out some capital. This would be analogous to you having, let's say, $10,000, and then you just put maybe like 1K into each account. And you got 3 accounts, right? And then you're using really small position sizing. Like I recommend having 2K in the account to even use the minimum sizing, which is 0.01, just because it makes it so much easier to roll out of stuff whenever you get trades that are really going far against you. It just makes it easier to capture the volatility with small position sizing. But let's say you had like 10K and you start 3 $2,000 accounts, right? So you have 2K, 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 and you're using 0.01 each of those accounts. And then you just take different trading opportunities in every account. A lot of people have asked me, can you only take one trade at a time? The answer is no. You can take multiple trades at a time. I don't recommend getting into a lot of trades all at once. There was a 5K demo account that I'm testing that it did really well at first, but it's not doing very good now. I fully expected this to blow, which is why I started a demo account. I didn't want to do this live because I expected it to blow. The account grew to like 6,400. It's now in a $2,000 drawdown this morning, and it's like 4,500 equity, so it's just below the watermark of the deposit, but the close balance is still 1,500 or so. What did I do here? I just literally went to every single currency pair and I would just randomly buy and sell just to test it, just to see what happened, right? I wanted to really stress test it and see. There's a couple reasons why this would be very difficult to work in live trading. In live trading, the margin that I get like 1 to 20 to 1 to 30 on most pairs with forex.com. So this is a 1 to 500 leveraged account, and that's taking every single like currency pair, just buying and selling with the minimum lot size of 0.03, since there's a 5K deposit and it's about 0.01 for every 2K. I just rounded up to 0.03. And I would just enter trades randomly, just buys and sells completely randomly, just to see what would happen. Another reason I just used demo for this. It still ran out of margin this morning. Like I currently can't place any more trades on that demo account because there's no more margin. And that's with 1 to 500 leverage. So what's the takeaway? The takeaway here is don't enter every single currency pair to trade, but when you're trading multiple accounts concurrently using DCA, you can take a couple trades on each account, right? I would just say think it through. Like if you're planning on entering Euro GBP and you've got a DCA structure, so you want to enter here, then you plan on adding, around the high. So you sell at the current market price, you add around the next high, you add at the next high, you add at the next high. Just calculate what the drawdown would be if it like really went against you far, like to where you have like 4 or 5 recovery trades. And if you can calculate that and you say, okay, there's $2,000 in the account. If this worst case scenario happens, that'll be maybe, $500 drawdown, 25% of the account or something. If that happens, then you can kind of know how many trades you can be in at once without overextending your trading capital or margin requirements or anything like that. So I'd say just be cognizant and be aware of that and kind of pre-plan that to a degree to just make sure you're being proportional about the trading opportunities you're taking and the position sizing you're taking on those and the potential likelihood for those trades to go against you. You shouldn't be constrained to just being only able to be in a certain amount of trades at once, because if you're doing that, it probably means you didn't do the risk structure appropriately. I just was doing this on one account because I was just testing this for the next 3 months. In the Nick's Trades group where I call these trades out, it's still in profit on the year. I started this group in March. I had a huge win streak the first 6 weeks, $183,000. So it's like 180K in like 6 weeks. Then I went through a losing streak this summer after my MetaTrader licenses got pulled from the broker I was with. They gave me my withdrawals and they gave me my profits, but then I had to find another broker, so I had to use forex.com. Using this broker has like screwed up my trading year. I wasn't able. This is just all excuses, mind you. I'm not a complete idiot. I'm fully self-aware. These are just excuses. However, they're pretty valid. Like I didn't have the leverage that I was used to, so I couldn't do a small deposit. So I had to do a much bigger deposit. And then I was trying to do my same approach I was using earlier this year, which is just to enter really heavy on trades that I thought were really likely to work out. And then using like a set fix stop loss and take profit with a high win rate. And it worked so well, like when I had the leverage to do it and I was using multiple accounts. 1 to 500 leverage is what I was using. Man, it worked so well. I had like a 95% win rate. It was crazy. Or 92% win rate after like 2 months. And then after like I got with forex.com, I couldn't take every trading opportunity that I wanted because I'd be using such heavy position sizing. It would murder out the margin. Then if it went against me, I couldn't even add to any trades, which I would do occasionally. And then I also couldn't take other trading opportunities. So there was cases where this summer, there were trades that I got in that went into drawdown that were going to breach the margin requirement, which I was forced to liquidate before the stop loss. And I had held them for like a week or two. So I was unable to take other trades that some of them would have ended up working out. All the history is there. If you subscribe to the Nick's Trades group, which is just literally a group just like it sounds, right? There's no guarantees for anything. It is just a group where I literally call out my personal trades that I take on my accounts. And you'll see it. You'll see the whole ups and downs. You'll see the huge winning streak at the beginning of this year. You'll see the losing streak during the summer. And then we've been on a win streak for the past 3 months as I've been testing out this new approach, which I said 3 months ago, I was doing this to test it out with small position sizing to develop a proof of concept. I think I figured out the kinks in the system. I think I figured out a good way to do it with a regulated broker, using the capital I have, with the position sizing that I have to use, while trying to navigate the FIFO rule and all the other US regulation. And they have an anti-hedge rule, so you can't even hedge. Not that I would do it anyway, but I'm just, it adds to it. There's a bunch of stuff I've had to try to figure out and dial in that I've never been used to in my trading journey, but I think I've figured it out. So going forward, I'm still going to be using this approach. It works amazingly. And I know what happened here with USD CAD. I've learned, just don't add multiple layers of positions. None of this would have happened had I been able to do that. And then I think what I even might do is just to get around the FIFO rule. If there's a time where I want to lighten up my position, is just accept that in the P&L, it's going to show negative because you're moving trades from your open P&L to your closed terminal. And so let's say I'm in a trade with a total of 4 standard lots. Right? We use this for example. Say I've entered down here and I want to close the trade up here at a loss, right? But I've entered here 2 lots and then I've also entered up here 2 lots. So let's say that I just want to close this position in 2 lots in profit and then I want to leave this position in 2 lots of loss down there. Well, what I have to do with FIFO is I have to close this position at a loss, right? So these would be done back to back. So I'd close that immediately and then close that. So it would show like a net loss or a net break even. But then what I could do is I could just immediately re-enter 2 lots. And what it is it's literally the same thing in terms of volume, right? I was in 4 lots with both of these positions, but now I would just be in 2 standard lots right there. And so it would essentially be, it would be roughly analogous to just closing that one at a profit, but then remaining in 2 lots. But the 2 lots would just be in an open drawdown. And instead the terminal would just show the profit instead of the loss. To do it with FIFO, I'd have to close both of them and it would show either a loss or a break even. And then I simply add 2 lots of volume to it and it happens to be right there. And if it works out, cool. And if it doesn't, it doesn't. It's just something that I just have to navigate around. But it's still doable. I can still do it. It would screw up looking at the statistics and tracking all the metrics and stuff. But I think it would be fine. Yeah, it would be good. So yeah, I'm going to do this. I'm going to go start multiple accounts. I'm literally going to do that today. And I'm going to start sharing all the trades. If you would like to join Nick's Trades, there's a link in the description. You can follow all my, literally all the trades I personally take. There's a lot of people here on YouTube. And I'm not trying to talk trash or make an expose or anything. I don't care. People can do whatever they want. But there are a lot of videos here on YouTube of people just teaching like a million different trading strategies. And like stuff that they don't even use, right? I've taught multiple different trading approaches over the past few years personally, but they were trading approaches that I was personally using at the time, right? I use my YouTube channel as like kind of a way of just talking about what I'm doing at the time and sharing anything that I think might be helpful to you. And the same thing in my Telegram channel that I've run for 6 years. I've just always posted what I've been doing at that time. Could you imagine if I made a YouTube video going over some type of a Fibonacci pullback strategy or like a moving average strategy where it pulls back and then I wait for an engulfing candle and there's like trading rules and a 1 to 2 risk reward and then I show a few cherry picked back tests? Like that would be I don't know, that would be really cringe in my opinion. So what I've done instead is I've always just tried to be pretty straightforward and say, look, this is what I'm doing right now. So I've been through a lot. I've been through support resistance trading with stop losses, high risk reward trading, low risk reward trading, no risk reward trading, which is what I'm doing right now, which is DCA approach. I've used hedging. I've used all sorts of trading approaches. But I've always taught what I'm doing at the moment and what I'm learning and what seems to work best for me. And I'm really happy about that. Y'all really get to candidly see like me on this channel. I don't try to curate content. I have so much trouble even recording something that I don't want to do, because there's been many times where I've tried to record a video about a topic that I think other people would find interesting, but I just am so bored and not engaged at all on that topic, and I just think it's so silly and boring that I get halfway through the video and I'm like, this isn't me. This isn't straightforward. This isn't uncut and raw. It's just it's not something that I don't want to upload anything that I don't personally feel like excited or happy about. And so that's why I do these screen recorded videos, and I don't really even edit them. I've tried doing before, like the whole editing process. I have a videographer right now that kind of helps me cut up things into shorts and sometimes do a video here, but I don't know. The whole hypey engaging thing is just not really me. I just prefer to be more real and raw. If you like that here, that's probably a reason you're subscribed. And if you're not subscribed, it's probably a reason you keep coming back to watch these videos. It's because you recognize that I'm like, look, this is what I'm doing. I don't know what'll work for you. I can't guarantee you anything, but here's what I'm doing. Here's everything I know. And I just try to put it all out here for you guys so that you guys can, I don't know, maybe learn a little bit from me and everything that I've learned over the past nearly 9 years of trading. This coming March, which is in like 5 months, 4 or 5 months. In March, it'll be 9 years that I've been trading. Crazy. I'm going to go ahead and hop off now. If you like this video, sweet. If you haven't learned my trading approach yet, you can learn in my previous few videos here on my channel. I don't know when you're viewing this video, because I'm uploading this here at the end of 2024 in November. And yeah, but you can learn all my trading approaches from around this time period, maybe like, October, September of 2024. I just teach it all for free, and you can follow all the analysis for free in the Telegram channel. Only thing I charge for right now is my personal trades that I take. So like the actual trades that I personally take, you can see me do it live and manage everything and all that. So yeah, hope you have a great rest of the day. I'll see you in the next one. Cheers, my friend.